Hello out there, Mr. Green here, Trade Phantoms. Just doing a quick check-in on proper risk management. Woo! It's amazing how many traders and investors get this thing wrong. People get so focused on, analysis, which I'm not saying this stuff isn't important because analysis is important, all right? But they get so hung up in analysis, education, this and that they forget that they're running a business. Your brokerage account is a business. I don't care if you got $10 in there or $1,000,000. It's a business. It needs to be treated as such. So I'm just going to pull up one quick thing here today. Like I told you, today will be a short video. Let me share my screen with you. Here, give me 1 second. So many tabs open up on the screen. Sometimes you just have trouble getting to it. All right. So today is Trade Phantoms managing risk in your business plan. And the beauty of it is your business plan is simple, right? Now, if I asked y'all if you were going to open up a restaurant or a nail salon or a barbershop, right? And you were going to jump into business, you'd have some sort of formal business plan. I hope so, because I know some people, and usually people that don't jump into those things with business plans, right? They don't find much success. Your business plan in trading and investing is super simple. It's actually in a 3-word letter acronym, okay? It is called SET. So let's move over to it. This is your business plan, people. Every order that you place should always have these 3 factors in it. It should have a point of entry, where you get in, a stop loss, okay, where you get out for taking a loss, all right, and a take profit, a T, right, where you're going to get out for gain. Set it and forget it. Yes, you can't make this acronym up, all right? It is that simple. I don't care if you're going to go long, making money in an upwards market, that is going to be your entry. Or if you're going short, all right? If you're going to short sell, you're going to have a point of entry, all right? We want to enter, obviously, where banks and institutions are selling, and we want to enter where banks and institutions are buying, all right? A predetermined stop loss is set so you know how much you're going to lose before you get into the trade. Yes, I use the word lose, L-O-S-E. Successful traders know how to lose correctly. Mr. Blue says it all the time. Learn how to be a professional loser. The more you can learn to lose correctly in this business, the more success you will find. Now, risk management is broken up very simply. A rule that we like to follow, and we didn't create this rule. This rule's been out there for years, is the 2% max rule. Never, ever risk more than 2% of your trading and investing account per trade. You can risk less. You can risk 0.25%, 0.5%, 1%, whatever. That's the max. But here's the key. You always want to have more of a risk to reward ratio at one time, meaning you want to at least have in a 3-to-1 on a risk to reward. So if you're risking, let's just say you're risking 2% of $10,000, hypothetically, that's $200 per trade. You've got to at least bring in 3 times that. So 3 times 200 is $600, meaning your winners have to be bigger than your losers. What I'm getting at here, okay, is it's not about being right or wrong. It's about letting your winners ride and cutting your losses short. Now, you can, of course, make a 4-to-1, a 5-to-1, a 6-to-1, a 7-to-1, but we stay base model with the 3-to-1 because basically at that risk to reward ratio, you can be a profitable trader if you're only right 30% of the time. And 25% of the time is break even. And if you're right 40, 45, 50% of the time, you're hitting home runs out of Fenway Park, all right? There's no question about it. But here's the deal. This is as easy as it sounds. But yes, some of you out there that have trading, because trading is not easy by any means. We know what the failure rate is, 97 to 98%. And it's most of the people don't follow these rules. That's why at the beginning, it's best to set it, forget it, and walk away from the screen. Okay? Please listen to Mr. Green. Walk away from the screen. Little rhyme, okay? I promise I can't rap. I'm not going to try to. All I'm getting at is whether you're holding something short-term or long-term, you're always going to have in place before you get into the investment, exit for loss or exit for gain. What does that do? It erases psychology and emotion. It erases coulda, woulda, shoulda. It erases all that crazy stuff that goes on in traders' heads, okay? I hope this was helpful today, all right? If you get the opportunity to. All right. If you're already a Trade Phantom, then obviously this doesn't apply to you. But if you get the opportunity and you would like to see more about what we do, all right, at Trade Phantoms, you can go to TradePhantoms.com. Okay. And we usually start off most students with what we actually call is a free class. It's a complimentary trading and investing class that we have for all beginners. All right. Some people like to hop right into the education. It's for each his own. It's whatever you want to do. Okay. But right here at TradePhantoms.com, if, you know, continuing on and checking out what we do is something that you're interested in, just click on register here. When you click on register here, it's going to bring you to the next page, which is just going to give you a quick little brief of our next complimentary workshop that's coming up, which in this case, it is this Thursday, the 22nd at 7 p.m. Eastern time with Mr. Black. I will be there as well in the room answering questions. Just click on register for free. All right. Fill in this quick stuff right here. Boom, boom, boom. It will send you out a link and you will be ready for us to come into class on Thursday. This is what you're going to cover during the class. Yes, I already talked about risk management. All right. We're also going to talk about what's the difference between professional traders and retail traders. We're also going to talk about, you know, it's not just about stocks. It's also about other things, right? It's also about Forex, futures, options. There's other assets to make in the markets. Okay. We'll talk about leveraged asset classes. Basically, we're going to talk about a lot. All right. So, you know, look it. Whether we are for you or not for you, I always tell students, you know, that starting off in a complimentary class is a great opportunity because it's highly educational. There are no promises or guarantees in this or life, etc. But this will give you the opportunity, right, to start, you know, seeing how a professional does this, what it works. And if it is, and you continue on with us, we have monthly subscriptions that are very cost effective. We all, you know, we have a promotion going on right now. Valentine's 35, you know, that's if you wanted to jump right to the members section and enroll in the class. But I would always recommend come to the free class first because we also want to make sure that you're a good fit as well. So everybody have a great day. It's Sunday. Enjoy the day. It's a day of rest and prosperity and trade safe. Have a great day. All right, Mr. Green, and I am out. Peace out. Now, peace.